All right, what a fascinating setup we have today. It's like a classic market tug of war, with some seriously powerful forces pulling on both ends of the rope. So the big question is, who's going to win? Let's dive in and break it all down. Okay, so first things first, we've got to get a feel for the market's mood today. What's the overall sentiment? Because some news that dropped overnight has created this really fragile balance that's going to define the whole session. And really, if you had to sum up the vibe today in just two words, it would be this: cautious, bullish. So what on earth does that mean, right? Well, it's pretty simple. It means traders are feeling optimistic, but they're definitely keeping one hand on the emergency brake. They're not ready to go full throttle just yet. And there's a huge reason for that little bit of optimism. And here it is, the main driver. The single biggest reason for any optimism this morning is this open-ended ceasefire extension with Iran. I mean, for weeks, the market has been on edge, right? Pricing in this so-called war premium, especially in oil prices, just terrified of a bigger conflict. Well, that fear, it's kind of just evaporating. And you can almost feel this collective sigh of relief washing over the markets. So now that huge geopolitical risk is, well, at least on the back burner for now, we can see what the bulls are really hanging their hats on today. And there are three pretty strong pillars holding up their side of the argument. Let's dig into them. Okay, so what are we looking at? Well, first, obviously, is that geopolitical relief we just mentioned. That's number one. But on top of that, we've got a massive new investment that's basically giving a huge thumbs up to the whole AI spending boom. Then, there's a monster earnings beat from a real market heavyweight. And to top it all off, we're seeing a big rally in riskier assets like Bitcoin. You put all that together, and that's the foundation for that bullish feeling this morning. All right, let's talk about that AI mega deal first. Amazon is doubling down, big time. They're deepening their alliance with the AI startup Anthropic. And look, this is not just some simple partnership. We're talking about a massive capital commitment here. It just goes to show that the story of the AI megacaps dominating, well, that narrative is alive and well. And just get a load of this number. We're talking $25 billion. That's with a B. A number that huge, it does way more than just bump up one stock. It's basically a massive vote of confidence for the entire AI spending cycle. And it's pretty much the main reason we're seeing so much strength in the tech sector before the market even opens. Okay, pillar number two. This one's a classic, a good old-fashioned earnings beat. United Health Group, UNH, a huge, heavyweight component of the Dow, they just came out with fantastic results. But here's the kicker. They also raised their outlook for the future, all the way out to 2026. That's huge. And we're not talking about a small little bump here. A 7% jump in the pre-market for a company this massive, that provides a real structural lift to the whole market, and especially to the Dow. It's just a fantastic sign that corporate health, at least in certain pockets of the economy, is still incredibly strong. And that brings us to our third bullish pillar, and this one is all about risk appetite. With those geopolitical fears taking a back seat, you're starting to see money flow back into what we call risk-on assets. And the poster child for this move, you guessed it, Bitcoin. It's rallying hard because the big institutional players are finally feeling confident enough to dive back in. This rally is more than just numbers on a screen. It's a huge shift in sentiment. I mean, breaking past $78,000, that's not just a technical victory. It's a psychological one. It's pulling the mood way away from that extreme fear we were all feeling just last week. And that momentum, it's spilling over, lifting up all the related stocks like Coinbase and Marathon Digital. But hold on, it's not all sunshine and roses. Remember that first word we used, cautious? Well, there's a reason for that. We've got two pretty significant headwinds blowing against this rally, and they're acting like a giant anchor, really keeping things from taking off. So let's unpack these two worries. On one hand, you've got the IMF, and they're basically tapping the brakes on the whole global growth story. They've just downgraded their 2026 forecast, and they're pointing straight at the fear of a potential oil shock. That's a direct hit for industrial and material stocks for sure. Then, back here at home, you have a totally different flavor of uncertainty. You've got the president publicly leaning on his Fed nominee, pushing for immediate rate cuts. Now, whatever happens, that action alone raises some serious questions about the Fed's independence, and that's rattling the bond market and creating a lot of volatility. So, the stage is set, right? We have the bull case, we have the bear case, which brings us to the most important question. Who's going to win today's tug of war?
Well, there are a few key events on the calendar today that could absolutely tip the scales.
Okay, keep an eye on the clock. At 10:30 a.m. Eastern, we get the oil inventory numbers. That's going to tell us if this recent drop in oil prices is the real deal. Then at 1 p.m., there's a 20-year bond auction, which, believe me, is going to be a huge test of investor confidence with all this Fed drama swirling around. But let's be honest, the main event, the one everybody is waiting for, that's after the bell. It's Tesla earnings, and that report could be a massive driver for the entire market come tomorrow morning. All right, let's bring it all home with the final takeaways. So as you're watching the auction today, what should you actually be looking for? These are the battle lines. This is what you need to keep your eyes glued to. So what you're seeing here are the key support and resistance levels for the S&P 500 futures. Right now, as we're talking, we're hovering right around 71.41. So here's the game. The bulls absolutely need to push us above that first resistance line at 71.68 to prove they're in charge. But if we slip and fall below that support level at 71.28, that's a sign the bears are starting to win this fight. These are the lines in the sand for today. And really, that leaves us with the ultimate question for the day, doesn't it? We have this perfectly balanced standoff. You've got powerful good news, you've got powerful bad news, a true stalemate between the bulls and the bears. So will tonight's earnings report from Tesla be the one thing that finally breaks this tie? Is that the catalyst that's going to tell us which way this market is really heading? Well, we're all about to find out.